Hey everyone, me Kevin here. How would you like to not have to pay your mortgage for 12 months and potentially not have to pay that money back for up to 30 years? Which, if you invested that money or maybe paid off some higher interest rate debt like credit cards or cars with that savings, you might actually end up way ahead in your financial position. Well, so many of you have been asking me about exactly this, how to get mortgage forbearance, whether or not you should actually take it. Maybe you've heard about it, but you're just not quite sure. Well, my goal is to try to get you mortgage forbearance in this video. So I'm going to show you step by step how to get mortgage forbearance, are you eligible, and pitfalls that you should avoid, including very clear scams that are going around about this. So let's get right into this video. Should you take mortgage forbearance? Let's start there. I personally believe every property owner is entitled to taking mortgage forbearance if they feel any financial uncertainty over COVID at all. In my investing courses, which I have investing courses linked below, in those courses, I recently spoke with a course member who said, Kevin, I'm so grateful I took out mortgage forbearance on my house, my car, and my credit cards, and now I have $13,000 saved up. I've always been paycheck to paycheck, and I've never had money in my bank account. What can I do now? And we came up with a plan for him to finally find a way to start paying off debt after the forbearance periods end and finally start getting invested into stocks at the same time. Now look, I'm just a dude on YouTube and I'm a real estate broker and an investor. I invest in stocks and I invest in real estate. But hopefully the tips in this video can give you a head start. Obviously, if you need tax advice, talk to a CPA. If you need legal advice, talk to an attorney. Or if you need financial advice, consider talking to a financial advisor. But hopefully this video can give you a head start on some perspective. All right, here's the thing. I'm not going to mince any words here. The CARES Act specifically says that if you state you have a financial hardship related to COVID-19, you can apply for mortgage forbearance. That means you don't need any documentation. There's no application, there are no income statements, there are no asset statements, nothing. Now, this doesn't mean you should lie. I personally am not taking mortgage forbearance because, knock on wood, I have made more money during the pandemic than before the pandemic. So personally, I didn't want to apply for mortgage forbearance, but I also am buying real estate, and you can't really take forbearance at the same time as you're buying real estate. That's gonna cause issues. So you don't wanna do that. But in my opinion, if your income is relatively the same, or you're worried about it potentially going down in the future because of a second wave, you're worried that your job might not come back if you've been furloughed, certainly if you're unemployed or furloughed or laid off, you should absolutely be taking forbearance if you have not yet. Or if you have rental property and you're not sure that your tenants are going to continue to be able to pay you the full amount, if you have any kind of uncertainty, to me, that is a form of a potential financial hardship. And so you have to make the decision yourself as to whether or not you can affirm, which just means state, that you have a financial hardship related to COVID. If you do, there's nothing required from you. You do not need any kind of documentation. In fact, the CARES Act itself, which I'm gonna pull up the actual bill. Here's the CARES Act. This is page 210 of HR 748. This is the CARES Act. And the CARES Act itself says that you have the right to request, the borrower has the right to request forbearance of up to 180 days, and then that shall, not can, shall be extended for an additional period of up to 180 days at the request of the borrower, as long as, if you want, you can pay the money back faster. Which, if you wanted to pay it back faster, you can. But the point is, the CARES Act says you have the right, as long as you affirm that you have a financial hardship, you have the right to ask for 180 days plus another 180 days. That is your right. This is a law that was signed into law on March 27th, 2020. It's the CARES Act. Now, how do you affirm? Like, where does it say that you don't need any documentation? Well, it's right here. It says that upon receiving a request for forbearance from a borrower under subsection B, we'll go above there in a second, the servicer shall, very important word, with no additional documentation required other than the borrower's attestation to a financial hardship. Let's go to the next page here. With no fees, penalties, or interest beyond the normally scheduled amounts had you made your payments on time, charged to the borrowers, provide the forbearance for up to 180 days, which may be extended by 180 days at the request of the borrower. It's that simple. And all you have to do is make the affirmation, which you could see right here under section B in general. During the covered period, which we'll refer to covered period in just a moment, a borrower with a federally backed loan, I'll explain that in just a moment as well. And then look at this, with experiencing a financial hardship directly or indirectly related to COVID-19 may request forbearance. So tenant is affected, maybe and maybe they're paying you less. I mean, you can make a debate there. Is that direct or indirect? Doesn't matter. They really have the door open here, right? On the prior page, this is page 209 of the CARES Act, you'll see that the covered period of forbearance means that you can ask for this forbearance 120 days after the date on which the national emergency regarding COVID terminates. So in other words, since at the time of this recording, today is July 23rd, you have at least 120 days from now to request forbearance. So if you haven't requested it yet, you still have at least 120 days from today. And the only time these 120 days start ticking is when they terminate the national emergency, which was instituted, I think it was on March 12th or March 13th. Anyway, this is really good, and it's really liberal as to what a financial hardship is. Well, I'm in debt. I already have a financial hardship, and COVID is making me uncertain, and my hours got cut, or my hours went down a little bit. They don't care. They don't ask. So it really just comes down to your own moral compass. Like, okay, do I have even a remote element or level of uncertainty? Let's ask for forbearance, okay? So this is basically, in my opinion, this is a version of free stimulus money that homeowners get the benefit of. Businesses got the PPP, people got stimulus money and unemployment. Homeowners, multifamily property owners, single family property owners, condo owners, whatever, anybody with a 1 to 4 unit has this benefit. If you have, that would be duplexes, triplexes, fourplexes, single unit. If you have more than 5 units, you might also have these options as well for you. Just stay tuned. We'll get into some details here on how to know what options you have. One more thing to note, these requirements that you attest that you have a financial hardship are very different from the requirements from the Paycheck Protection Program. The PPP made you sign an affirmation that said you needed PPP money in order to sustain your business. That's a lot more stringent, in my opinion. That's like, unless you get this money, you're going bankrupt, right? That's a little harder to defend than I'm directly or indirectly affected by COVID. And they're not even asking for documentation. With the PPP, they ask you for some documentation, right? Anyway, so literally by asking, you are eligible for mortgage forbearance. Now, we'll talk about eligibility a little bit more in just a moment because not everybody is, but we'll talk about it. And all you have to do is ask. And remember, I'm not an attorney. I'm a real estate dude. and I like it, by the way, when I can help you get free money or information for free. So if you like this kind of stuff, consider sharing this with your friends and family or anybody interested in more information on forbearance, because we're about to get into the details and the pitfalls. Also, if you want something for free, make sure to go down to the description in the links down below, and you'll see a link for 2 free stocks with Webull. If you click that, you deposit $100, you'll get 2 free stocks worth up to $1,400. You can also sign up for life insurance in as little as 5 minutes. Now let's talk about the second part, about whether or not mortgage forbearance is right for you. If you're a real estate investor and you want to buy real estate, because maybe you're in my real estate investing course, or you're ready to buy real estate, you're ready to buy a house, mortgage forbearance may not be right for you. If you want to buy real estate or refinance within 3 months of being in forbearance, you're going to have issues. That is, if let's say you go into forbearance and then you're like, oh, there's a house I want to buy, you're going to have problems. You probably won't be able to qualify. You have to have, if you went into forbearance, you have to have started making your payments again for 3 months. And then you can qualify for a new loan again. Now, always confirm this information with your lender though, because everybody's situation is unique. Also, you generally can't take out a new loan during the pandemic. Like if you just bought a house within the last couple months, you probably won't be eligible for mortgage forbearance because you probably signed some kind of document in your loan docs, you know, when you sit there with the notary for like an hour, that says you're not eligible for forbearance. They kind of started doing that right in March. So if you bought between now and March, probably you're not gonna get far with mortgage forbearance. Maybe you can still try. Anyway, If you're good with part one, the indirect or direct financial hardship, and you're not buying or refinancing anytime during, the next 12 months, let's get you started. Step number one, get your latest mortgage bill for your rental property, your second home, your house, your condo, your units, whatever. And if you already know this, like if you already know that you have a Fannie Mae conventional loan, a Freddie Mac conventional loan, a VA loan, a USDA loan, or an FHA loan, then you might not even have to call your mortgage servicer for this. Your mortgage servicer is the company you make your payments to. Sometimes you could even ask your real estate agent or your loan officer that you used when you got your house or your loan if you were doing a refinance. If you don't know what kind of loan you have, contact your loan servicer and ask them. And what you want to ask their customer service department is my loan a, quote, federally backed loan or a GSE-backed mortgage? That stands for government-sponsored entity. It's like Ginnie Mae, Fannie Mae, Freddie Mac, right? Or federally backed would be like FHA, USDA, VA, things like that. So what you want to ask them is my loan federally backed or a GSE-backed mortgage? If the answer is yes, you can keep going along. And if you already knew the answer, keep moving along. If the answer is no, and you don't have a federally backed mortgage or you do not have a GSE-backed mortgage, you might still be able to ask for forbearance, but you're probably not going to be protected by the terms in the CARES Act, which means you're probably going to be stuck with the terms that the servicer gives you, which is, again, the company you make your payments to. So let's say you own a 10-unit apartment building, and you're like, dang, it's not a conventional, federally backed loan. Well, and the servicer says, hey, we can give you 3 months of forbearance, but then you're going to have to pay us back over the next 3 months. Maybe that's what you're stuck with. So you have to check with your own individual lender. But be careful, because a lot of you have federally backed loans and you're being told a bunch of BS by the banks. So don't get screwed and get the answer first. Is your loan federally backed or is it GSE backed? Get that answer before you even ask about forbearance. Very, very important. Just so you know, the banks have to pay the first 4 months of losses from you taking forbearance. So the people you make the payments to, they're covering the first 4 months. They don't want this forbearance stuff. This stuff got shoved down their throat. They're not trying to help you. They're trying to prevent you from doing this. They're trying to make this hard for you to do on purpose because it's money out of their pockets. All right, now that you know what kind of loan you have, I really encourage you to go to the link in the description down below. I'm going to label it Link 1, Consumer Financial Protection Bureau. This is going to give you a guide. And on the left side, when you go to that website, you'll be able to kind of scroll through and see, oh, okay, well, if you have a USDA loan, go here. If you have an FHA loan, go here, yada, yada, yada. And you can go through and see what the terms are for each loan. We're going to do some of that right now. Let's get the iPad here and let's pull up some examples here. Here's an example. This is a Fannie Mae sheet. So if you have a Fannie Mae loan, these are the options for you. You can get defer or forbearance for up to 12 months. There are no late fees during your forbearance period. And take a look at this. You can set up a repayment plan to catch up gradually, or you could defer the past amount to the end of the loan. So these are options that you have. And Fannie Mae is telling you that if you have a Fannie Mae conventional loan, you have the right to take forbearance for 12 months and move all of the missed payments to the end of the loan. Now, when it comes to impounds, you have to be careful. Usually, if you have impounds for property taxes and insurance, the mortgager, the servicer, is supposed to continue paying those for you. But I would verify that. That's not specifically stated in the CARES Act. If they do not keep paying that for you, then you might have to contact the local county tax assessor yourself and see if you can get forbearance on that and maybe pay the insurance separately. Check with them. They'll guide you on that. Best case scenario, they just defer the full payment to the end, which is, in 25 years from now or 30 years from now or something, which is basically free money. That's why I call it free stimulus money, because think about it. If you took forbearance, $2,000 for 12 months, that's 24 grand. You invested it at 7%, you would double your money, within 15 years easily. even if you got a little bit less of a return, which that kind of means it's free money because of the time value of money. Anyway, it's really, really a good option. Fannie Mae makes it right. They do right by you and they do a good job. Now, it also does beg the question like, okay, well, if I defer for 12 months property taxes and insurance, am I going to owe that extra at the end? Possibly. You might, owe the property taxes for this year at the end of those 30 years. That's a question to ask your individual servicer, though. Again, best case scenario, you could defer the entire bundle to the end. Okay, let's keep moving on here. Here's what Freddie Mac looks like right here. So if you have a loan that is owned by Freddie Mac, they have the same thing as Fannie. Defer for up to 12 months, waiver of late fees, halting foreclosures, and look at this. Starting July 1, offering payment deferral solution in which payments will be due at the end of the loan. That's free money right here. Really, really good. Stay away from this. If you see loan modification options, stay away from that. Loan modification can hurt your credit more. Be careful with loan modifications. It can make it hard for you to buy in the future. Bad. Loan mod, bad. Deferment, good. Okay, then we've got this little fact sheet here. This says if you have, here we go, if you have an FHA loan, they say that FHA does not require lump sum repayment at the end of forbearance. FHA has established a COVID-19 standalone partial claim to assist with repayment. And basically it's saying if you were current, what they're going to do is they're going to establish a zero interest junior lien on the property that becomes payable when you sell the home, pay off your mortgage, or your mortgage ends. So that's basically the same thing as saying you owe it at the end of the loan. Because if you sell, then it comes due. It's the same thing. So don't be worried if you hear, oh my gosh, junior lien. Don't worry about that at all. That might create potential issues only if you want to get like a second loan on your house for like a home equity line of credit. But otherwise, I would not worry about that. It's totally fine to do a second lien on the house. You do owe the money after all. There's no difference in saying, okay, my mortgage is $300,000 and I owe an extra $10,000 at the end of the loan, or okay, I have a $300,000 mortgage and a $10,000 second. No difference. Totally fine. In my opinion, okay? You can confirm yourself. No guarantees. Don't sue me, bro. VA. Let me tell you this. I feel like VA borrowers got screwed. They don't have as great of options. See, VA gives you a suite of loss mitigation options that can assist veteran borrowers who must repay amounts that were subject to forbearance. And then they do try to evaluate and assist your borrower, blah, 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 blah. Basically, they're not going to make you make a lump sum payment, but they're going to put you into some sort of, VA payback plan or something. It's just not as good. USDA is, let's see right here. If the borrower is unable to resume normal payments, the lender should evaluate the borrower for all available loss mitigation options. Also not as ideal. So USDA, VA, not so ideal. FHA, Freddie, Fannie, it's money in the bank, folks. Take forbearance all smoking day long. Now, let's keep moving on because we are making good progress here. Once you have this information, and only once you have this information, should you contact the bank and specifically request forbearance. I'm going to show you some pitfalls in a moment. Remember, forbearance does not require any documentation. You want to request 180 days of forbearance. That is your legal right. Remember, refer to page 210 of the CARES Act. Then, and I'll link all this stuff down below. Then remember, you do have the option to request an additional 180 days of forbearance. Step number 3, going into forbearance, and then we'll do pitfalls. Going into forbearance and credit. All right. Only stop making your payments once you have written confirmation that you are in a forbearance plan. You may have your credit score slightly impacted as a notice put on your credit profile saying that your account is in forbearance or affected by a natural disaster. This is honestly like straight up BS, but just roll with it. It's BS because the CARES Act says you're not supposed to have a derogatory remark put on your credit. Like, They can't put you in forbearance and then say you're late. That's not what's happening here. But they put a little memo at the bottom saying this has been affected by a natural disaster or in forbearance or whatever. That usually does affect your credit by about 30 to 40 points, but it's really temporary. This is normal. Your score should go back to normal. It is not a late. As long as you were current before, you won't be considered late. If you were already late, well, yeah, then you're still late. But if you were current before, you'll be considered current still. No guarantees, but here's what happened for me. I accidentally enrolled in mortgage forbearance making videos like this, and my score dropped 40 points. I never even missed a payment, but my score immediately dropped 40 points. But it went right back within like 2 or 3 weeks. So no guarantees. Maybe it's because I kept making my payments. I don't know, but it's not that big of a deal. The money savings is worth it. Let credit be a tool for you. Don't be a tool for your credit score. All right. I should put that quote on a mug. Now let's talk about the pitfalls. It's very, very common that banks are saying, well, we'll give you the option to have 3 months. They're saying that because they know they have to pay a full 4 months. And their goal is to pressure you and twist your arm into only taking 3 months so they save a month. Think about it. They would save 25%. You might have to play ball with them. But I encourage you to document exactly what the bank tells you. Write down employee ID numbers, names, times, dates that you called. Put this in a safe place. Take a picture of it, scan it, whatever. Make sure you tell them that you know the law says you have a right to 180 days and 180 days, and that's what you're demanding. I would even email them or document this to their departments and request this. And make sure you don't sign anything that says something that's different than this. That's how they screw you. And I'm going to show you exactly how they try to bully you right now. Take a look at this right here. I'm gonna pull this up. This came to me from a subscriber. Now let's take a look at a scam. Take a look at this. Dear valued customer, thank you for submitting your completed mortgage assistance loss mitigation package. You don't need to do that. All you have to do is fill out a simple little form on their websites usually that say, I request forbearance. That's it. There shouldn't be a loss mitigation package where you're giving bank statements on all that stuff. That's a scam. Look at this, special forbearance plan. I don't want anything that's special. I just want forbearance that was given to me by the CARES Act. Okay, let's take a look at what this plan is. The special forbearance plan is not intended to bring the loan payments current. That makes sense. Your account is currently due for July 1st and subsequent payments. Okay, so it's actually still timely, right? Because I'm recording this in July. You're not technically 30 days late until August. Okay? We're pleased to offer you special forbearance to allow you time to recover. Let's see what this plan is. This plan will terminate at the earliest of these situations. You return to permanent employment or your financial employment situation has improved. Wait a minute. There's nothing in the CARES Act about me going back to work and then terminating this plan. Nope, big X. Would not sign this. You fail to make payments according to the schedule below. Okay, we'll look at that. Upon completion of the payment plan schedule below, if applicable. Okay, we'll look at that. At the end of this plan, you will need to take one of the following actions. Fully reinstate the loan by paying all of the payments due. No, that's a horrible idea. Pay off the full outstanding balance of the loan. No, that's stupid. Apply for loss mitigation assistance by submitting an updated loss mitigation package. No, what are you talking about? If you're still unemployed, it is possible the only available option will be to sell your home. This is utter garbage, complete scam. This is how these banks are literally trying to rip people off. Absolute garbage. This is not in the CARES Act. This is not what the law says. As part of this plan, you are agreeing to the following responsibilities. Actively look for employment. That's not what the CARES Act says. Immediately notify us of any change in your employment. No, screw you. Call in to provide monthly status updates. No, that's not what the CARES Act says. Rip off. Repayment schedule. So they give you a 6-month repayment schedule. It's 0, so it's nice, but at the end of these zeros, you have to pay up all of the 6 months you missed. Signing this would be a big, ugly mistake. This gateway company is trying to rip off their customer, and it's absolutely disgusting. This is exactly the opposite of what the CARES Act is designed to do. This is absolute greedy corporate bullying. That's the kind of garbage you have to be careful of, because that's the kind of crap that's out there. So stay safe, be smart about the decisions that you're making, and do the right research. Folks, thank you so much for watching. If you like this kind of content, please consider subscribing. I really appreciate your support for the channel. Check out the courses that I have linked down below so I can help you build your wealth. And always remember, I really appreciate your support, and thank you so much for watching.